Hello, everybody, and welcome to the Open eCry market commentary for the week of June 24th. My name is Toby Gennaro from Trade with Precision, and just coming to you with the outlook for the markets this week. So let's get to the charts here on the S&P 500, looking at the broader equities index here, looking at the ES mini futures contract for the S&P 500. Now, on the monthly chart here, we've been looking at some of these candles here for a long time. We don't really have any. Actually, we do have some new news here. We have, as you know, the candle that we had here for the month of May, obviously just a slightly bearish candle there. We have some extension away from the moving averages, had a rejection off some of those highs there, but we still essentially have higher highs, higher lows on the monthly chart, with the exception of, for the first time, the month of June actually came down, put in a new low there of 1570.50, and then broke the low of the previous month in May. So for the first time in probably almost 6 months, we actually have a lower low in place on the monthly chart. So nothing to get too distraught about. We do have a support level there right around that 1530 level. We do have some overextension here on the moving averages on the monthly chart, but if we move over really to the chart in question, which is the weekly chart that we were discussing last week, if you'll recall, had a nice pullback right into the buy zone around that 10-20 period moving average and had a nice setup there of 2 bullish candles. In the 1 week we had set up, we were looking for the break of this candle, and we basically just got almost just a slight break of that the following week. So we had 2 bullish candles, and then this past week we were just looking for basically a break of the high of those series of bullish candles, and we just barely got that last week right ahead of the news announcement. We got a break above that 1648.50 level up to 1649, and then the Fed came out with that quantitative easing announcement, and that they might be pulling back from that here in the future. Probably 2014 is what it sounded like. And then we got a breakdown below that low of that major support level of 1594. So pulled us back into a low there, I believe right around 1570 of last week. And so again, it puts us right back into the buy zone. We have some extension on the downside from the daily chart. So at this point, if we can find some resistance here at 1570, I'd be looking for this number of diverging chart structures on some of the lower time frames like the 120 and the 60, which tells us that we might have kind of a relief rally here, at least back up into potentially this 1594 level, if not back up into this 1621, 1622 level, which would then put the price action right back in the equilibrium level, right around the 10-20 period moving average, which potentially with all this price congestion here might be met with some selling pressure there to then potentially push the market down to retest this 1570 level. So we're going to have a little bit of probably a sideways market here, I would anticipate, until we get kind of a bottoming structure here in place on some of these higher time frames, and at least this next week to actually get a bullish candle to set up in the buy zone on the weekly chart. And then next week on the commentary, we'll be looking then for the break of any potential bullish candle setting up in that buy zone to then take the break of the high of that candle. So in looking at some of these other time frames, as you go lower on below the daily chart, you'll see that a lot of the moving averages then are rolled over, and we have some well-defined chart structures to the downside on everything at the 480 and below. And so, but you can see on some of these where we have some lower lows, you can see that we've put in higher lows on the indicators, which signaling that the trend could be bottoming out here. It could be looking to find a bounce point, which we haven't had yet on this whole move down since the Fed announcement. And so any bounces then more than likely would would move back into that 50% retracement level, that 5062 level, which would be right around that 1620, 1622 level. So that probably looks probable in the cards for this week. But again, we need to see that bullish setup candle here in the buy zone on the weekly chart, which we'll be able to provide some more insight for in the commentary next week. But that's basically what the big caps are looking like this week. Let's take a look at the small cap index and see if small caps are telling us anything different than the large cap index on the S&P. So in looking at the Russell contract, we can see a very similar chart structure here. We don't actually have the same candle structures that we did on the ES contract, so we don't really have any lower low in place on the monthly chart. We do have some overextension from the moving averages. We still have this, this 860 level. That's going to be a pretty solid place for support here. At some point we'll get a pullback at that level, I would surmise. But then moving over to the weekly chart, as we were looking at on the ES, that same pullback structure exists right back into that solid support level that we've been talking about, right around that 950 level, which has been tested, just broke slightly through that last week, and then it looks like we're getting a nice little bullish candle there, rejection candle right off of that level. So if we get a break at the high of that candle, this could signify more of a positive move, at least something maybe back up into the moving averages, which then might be again met with some resistance there and some selling potentially, since you have a lot of historical price congestion and some levels right there around that 976 level. As we move down to the 480 chart, once again we have all the moving averages in alignment to the downside. Have a nice bullish rejection candle there, as you can see pretty well on the 480 chart right off that 950 level, which we were talking about for quite some time. So again, market really looking like it wants to bounce here this week and then potentially set up that bullish candle in the buy zone on the weekly chart. As we move down then to some of the lower time frames, you can see, as you would expect, all the moving averages are flowing to the downside, but any bearish temperament that you would have on some of these charts down here needs to certainly be tempered with the fact that we're pulling right back into the buy zone up against a solid level of support right here at that 950 level on the weekly chart. So really this week, once again, we're going to have to bide our time here and look for some kind of a bullish candle here. And then look probably at next week's market commentary, next week's price action, to then look for a break of any kind of a bullish candle that might set up here in the buy zone. So pretty much the same scenario. We just do have a little more bullish scenario setting up here on the daily chart for the small caps. And you can see how far this support level has, or this actually resistance level has been in place. And now as we move down there to retest that level, it should turn into a pretty solid level of support, with that rejection candle then confirming some of that. So things looking just slightly bullish here on the Russell, but looking to be overly, basically just looking to be cautious this week and wait for the higher time frame, the weekly candle, to set up and give us some inclination of where the markets might be breaking in the coming week or two. And just taking one look at a foreign currency pairing here, looking at the euro dollar. Nothing new here, as you know, anybody who's been trading this currency pair. Market's really been ranging here on the monthly chart in a pretty wide range. But as we start to go down to some of the lower time frames, you can see that we actually do have on some of these moves on the lower time frames, you will find some nice trending setups like we have had on the euro dollar. So we do have on the weekly chart, even though all the moving averages aren't in perfect alignment, they're basically the 50, the 20, and the 10 look like they're getting back into alignment to move back to the upside. But we do have higher lows, higher highs, and even some of these right here are still higher lows, and these right here are still higher highs. We just haven't gotten back up beyond that 137 level. But being that price has pulled back essentially right into this level, right around that 131 level. We know that right below that we have that solid 130 level that has been both support and resistance for quite some time, which is good for us. And we put in a Fibonacci retracement from the most recent low to the most recent high. We can see that we just pulled back into that 50-62% range, which is where we sit right now. And we don't have this candle closed around, but we'll have to see for tomorrow if we get a nice bullish candle closing out right there, right in and amongst this nice cluster right around that 62% level and then that 130 level. And that would then provide us essentially a base to maybe launch forward here, at least back up into 50% retracement of this move, or perhaps back up to the most recent high of of 134. And then looking at some of the higher time frames, there's that level then back up there around 137. So it looks like there's some good probability there in looking for a long play on the euro dollar. If you take a look at the dollar index chart, the dollar index has just bounced as of some of the last week's news back into basically a 50-62% retracement level and some resistance. So looking like there may be some selling in order for the dollar, and then that would give us some more confidence here that we could potentially be looking to go long this pairing here with the euro dollar based on some of the technical analysis that we see here. So things looking just slightly bullish here. We just need to see and get a setup candle here on tomorrow and see what this candle looks like. And if we don't get a pullback all the way back into this 130 level, then we may have just a small candle setup right here, which will give us a break at the high and a break at the low that will define our risk. And obviously the candle, if it's the smaller the better. And there are a number of other parameters here and levels that are helping us in favor of this trade, potentially moving back up to the upside. So there's a wrap up for the week. We'd like to thank you all for watching the OpenECRI market commentary for the week of June 24th, and we look forward to speaking to you next week on the Market Update.